Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So BTC getting a little bit of a rejection off of that 786 diagonal pitch fan level. Are we coming back down to the 706 of this diagonal pitch fan we've had price in since January of this year? We are reaching an idea of this level, of this daily support and resistance level becoming resistance as we start to possibly break down. Let's go into the liquidity of high block capital. What is this high block capital, you say? Well, people lock that liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss. And we get to see where those crispy characters are, so let's do it now. Shout out to everyone here. What's up, Brett? So this first little short to the downside induced some shorts, which they came back to with a fury to liquidate yesterday with that V-shaped liquidation. We went over that. They took out that $113 million pool, and then they slowly started to drift into these longs. $117 million pool and $128 million pool gone.
Fatality.
And that induced 163 million of shorts, which they came back to promptly pop those 100x shorts.
Fatality.
And then they continued on their merry way to the long pools below. And it looks like it's rounding out nicely to attempt to stab lower. The 1 minute time frame only having 1.4 billion in long liquidity imbalance to possibly come down into the shorts. Scared to enter as the pools are not as thick as they were up here. So they did their business by coming up here and scaring out the shorts. 1, 2, 3 hits to the high. This is what we talk about in terms of a short setup. This was your fourth hit. We talked about BTC liking 4 and seeing what the fourth hit will offer. This is often your easy entry, and we'll go and show you how that was. Our analysis for that strength hit on here did not play out. Where would Momentum Master have gotten you out of that idea? We're not a service that offers signals, so while we were looking at this here on we were looking back here on, this was when we gave our update here. And so where would you have seen the possibility to enter a short here? So first and foremost, we talk about 3 hits to the high being a signal for a potential setup. You could have looked at this as one singular hit, or you can just look at this as a 3 hits with a confirmation here, and that could have been your confirmation signal. Now, what would this confirmation signal have been looking like in terms of momentum? Well, if you look at the hourly time frame here, this is the same setup we look at down here in terms of reclaiming the cloud and then bouncing off of the cloud. This is the inverse of that. So if you flip the chart upside down, same kind of idea. We broke the cloud, we came back, we retested and held, and boom. This is your A, B, C pattern. A, B, see you later. And so that would have been a key feature to watch this cloud thinning on the hourly, and we are not making candles above it, so shorted. Boom. Nice little move there on the hourly time frame. People that tell you that indicators cannot give you some presumption of the move of momentum or the shift in momentum are liars. Plain and simple. Show me the receipts of your trades, my friends. All right, so, and keep it on the books. So let's go ahead and take a look at the daily time frame and turn this off, and we'll come back to the momentum in a minute. First, let's go to the higher time frame setup for high block and see what the liquidity dragged in on the 7-day. Let's go. All right, so if you look up here at 43.6, we still have that thick range insinuating at some point we hit an order block of some type. We still have some liquidity down here at sub 40K too. So at any point in this journey downwards, if we're going without a fury to the downside and just drifting to the downside, this could be a reaccumulation idea to go up to that 45K for one last hoorah to the upside. 7-day is got 2 liquidity bands, the thickest one located above in this immediate range. Going to the monthly. The monthly does have that sub 40K region, but not in double-digit fashion like 45K. So 45K asking for a little bit of a tap to the upside at some point to put in a higher high. Although the entire drag of the downside is being generated here by the longs at sub 40K, getting a little bit of heat added here to that 39.6 region, some static orders to asking to get hit, possibly swept down below. Let's go ahead and take a look at the 3-month. 3-month also has that beckoning call to the lower nether regions at some stage. Same with the 6-month and the 2-year. 2-year is starting to beckon some orders up to the upside. 45.2 has $76 billion up there, and also getting that liquidity draw potential for that higher time frame goodness. If we go to the monthly and then start to head into the charts, I gotta be out of here early. It is the weekend. Gotta take my kids out and about and let them experience life. So I will go enjoy life in a bit, but let's do the analysis first. All right, so let's go ahead and throw on Momentum Master, link in the description for more. And yeah, you can be your own guru with Momentum Master. If you go down to features, toggle everything at your leisure, and you can see all of the components that we hold into prominence: the trend cloud, the baselines, the stochastic array, the super trend, and more dynamic alerts to your phone with all that fun stuff, all the fixins. And yeah, enough with that. Let's go into the 3-day. We're talking about how the 3-day cross event is possibly looming. So this 3-day event is now currently crossed down. We're going to remove this. We already went over that, but just looking here and clear on the 3-day, you see this cross down event. How this candle closes over the weekend will be the sign to see if we are looming on this 3-day cross down event. If the 3-day cross is down, last time that happened, I said before, we crossed down and it gave another opportunity to grab in here, and you had that equal hit once again to take that in the downside. But it's your one of the few leading moving average formulas on the market. They're your first sign of reversal, fractal in nature, and can be seen on all time frames. So this 3-day cross down event proving to be interesting, to say the least. Do we get a push up and a sell-off wick? Is this the last hurrah to the upside at some stage for the offloading of positions? There was some post I saw about whales putting Bitcoin onto the exchange. Why would you put it onto the exchange unless you intend to sell them? So that is something to be aware of. The tapering effect of the daily time frame is also starting to appear here. You're seeing this 2 o'clock abate to 3 o'clock, which shows that fatigue potential. You also have this cross down event, which is showing the suppression on these wicks here, and we're not making it above on the daily time frame. So the daily time frame cross down event starting to suppress here. The Williams giving you a little bit of push down. It's not the end of the world though. We might have one last hurrah on the lower time frames. Let's go ahead and take a look. the 22-hour coming back to the cloud here on the 22. The 22-hour also tapering in a manner here. Do we find some support here? Where are we in terms of a Fibonacci level? Let's go ahead and change this to a pocket. We're coming back to the 6-6 region of this impulse to the upside. Do we come a little bit lower into a deep retrace region? We're here for it either way, so let's put it at the deep because we already hit that deep level with the 706. So coming to the 12-hour also having this tapering effect. The 12 and the 22 clouds looking mighty similar in nature. So do we get some sort of push up on the 12-hour, starting to get some suppression? And the thing we always talk about here with the oscillator, the money flow beneath the RSI. Here is the money flow. Here is the RSI. When the money flow goes beneath the RSI, it insinuates a curveball wind-up pitch to the upside. Conversely, when you get the money flow above the RSI, this fatigue starts to present itself, and boom, it comes to the downside. So this last time we had this disparity, we had some hidden bullish divergence on the R's money flow, and it shot us to the upside. So are we going to get something similar? That could be the case. On the 12-hour time frame, subtle support of the 12-hour potential. Let's go to the 6-hour coming down now. Even Steven on the money flow and the baseline could come a little bit lower. And yeah, seeing this suppression of the cloud. The cloud did not turn here. We're seeing this, I think this was on a lower time frame actually, with the 4-hour. No, it was an hourly? No, it was the 6-hour. So the 6-hour did not get the curve here. We could not reclaim the cloud, so this did not happen. And looking at that fatigue on the hourly would have had you at hello for the drop. The moves generate from the higher they get support from the higher time frame and generate on the lower time frame. So looking at how this is curving here on the 6-hour potential cross down event could mean this is a larger C wave down. Let's go back to the liquidity here on the monthly. You have some pools down in that sub 40K region. So if they were to come down, it would break this support, having already hit it multiple times. Coming in, hitting, sweeping this 40K off the table would be the next move if it were to break this support. And we have those pool levels down here, 39.5, 40K even for the wick here. And going to the lower time frame of the 4-hour. 4-hour currently beneath the cloud here, struggling to maintain and getting the cross down event on the 4-hour. So this cross down event, this 4-hour not curving or thinning at all, and actually closing beneath the cloud. So this is a bearish tonality of the 4-hour continuation idea of this possibly turning into a C wave lower, and this being a potential inducement for the people trapped up here in the long. Let's go into the oscillator here. Yeah, still getting some possible bottoming out of the 4-hour. Coming to the hourly. And the hourly, where you had this 3 hits to the high plus the confirmation A, B, C to the downside. Struggle. And this cloud thinning potential and not able to maintain was a perfect setup. We go over all the time. It's reversed, and you just look at the schematic. It's the same thing, exactly the same, fractal in nature. So this 3 hits and confirmation. Okay, so we're coming back into this candle here and recovering this liquidity bounce idea. This hourly already played out, so we're going to delete that, consolidate some lines here, and go into the hourly. The hourly oscillating and meandering back down, the money flow beneath the RSI and getting oversold here. So the hourly could give us a little bit of a play over the weekend. Once again, this is December 16th, Saturday, low liquidity weekends. Do we get a bounce on the weekend? We have in recent times past, but I wouldn't count on it. And it is possible that there are algorithms at play set to trigger over the weekend, so we could see something, but I'm not the type to waste my time staring into the abyss all over the weekend. But I will give you that update, of course. So we have recovered this wick. Wick recovery is something of a thing. So if you notice a big buyback wick, coming back to recover that wick is something to note. Coming back to the 706 at 41,399. Liquidity on the charts would insinuate below it has a thicker band as of this moment in time. You have more to recover, so a slow drift to the downside, possibly coming to that 40,392 region. Thicker bands of liquidity down there. We'll see how it triggers some of these short pools to enter. If it triggers a big pool like it did here with the 163 million, then they can recover that nicely. As of this moment, you're only getting a $63 million inducement, which they're coming back to now. The 100xer that opened up here at 41,746, about to get liquidated up here at 41,975. You don't short into support, and you short tops and you long bottoms. This is where you'd be looking to short, yet people long up here instead, and this causes it to drift down into their liquidation point. Okay, so yeah, so a slow drift to the downside over the weekend. Would not be surprised. We are basically drifting into some long liquidity pools, possibly double bottoming on a larger time frame here down in this 786, 886 level, maybe even coming and recovering this wick down at 40,227. This region does have that amount of liquidity to grab down here. 41,233 does have a nice little pool. Also down in the bottom here, you have this thick band of liquidity over here. Overall, I'd be careful on the monthly time frame. Looks like we could be winding up for a reaccumulation hit up into this region. So depending on your conviction of whether we will put in a higher high or not for that last hit. We have one hit here. This was 1, 2. Do we get a third hit up and wild sell-off and then come back down again? That's what I would expect at some point. Maybe hit an order block down here at the 786, bounce up to that for a strong attempt at a weekly close, and then sell off down below. That makes the most sense to just stop out all the longs slowly over the weekend, give this bearish tonality, and then surge up and then finally drop. So we will see. I'm not putting a prediction out for today. I don't see anything but sideways. Possible slow drift down would be my guess. If you slow drift down into these regions and potentially bounce off that 786. We're getting the hourly cross down event and suppression from the higher time frames, and this cloud starting to come down on you with the hourly cross down event. So basically drifting a little bit lower here would be my prediction for this moment. Let's go see how the dominance is holding up versus the USDT dominance and how the alts are performing. Then we will bid you adieu. Coming back to that 236, we cannot close beneath it, so coming a little bit lower, still possible to come up into this region. We have yet to get that bounce up. This creating a double bottom formation off of this potential bearish projection that's not playing out. So we're possibly rounding out here for a little dominance bounce. If the dominant Bitcoin dominance goes up and we go down, then the alts will take a hit. And this would also be seen in the, we've negated the 236, so this bearish projection is gone now. So if this comes up in a manner here, then basically people are getting stopped out into trades. So if this comes up and breaks through and comes back and retests this cloud, then you could be on your merry way for a downside play. For the last few times we've struggled to get above that, so this has been showing strength for upside. This is why it looks similar when you flip BTC. It's the same basically. As people enter into BTC, the USDT dominance drops, so it goes down when BTC goes up. So that's why we just flipped it. This is what it looks like on BTC, right? So if we find some support here on some resistance here on the 12-hour and come back down off that resistance one more time, then we could basically put in that higher high for BTC at some point. So watching how these candles close above this cloud or not. There's been a lot of stop hunts on both sides. Looking at total 3 attempting to burst up here, get a huge rejection off of the 706 level of this bullish trend-based fib level. And yeah, coming to the total for the cryptocurrency, still finding this support, has yet to come up into this level. Let's go ahead and see where that coincides. Over to the left, the 618 possible rejection if we come up and hit that higher high and then start to make our descent. Broader markets, you had the Dixie going even lower here. Took a huge sell-off after the announcement of increased interest rates next year, or the increase to cuts to interest rates next year, giving bullish tonalities for the markets to surge. And yeah, basically got a rejection off the 786 here, coming down into a deep retracement. So we're going to switch this over to deep now, so coming deeper into the levels here. This bearish projection played out, so it's holding this resistance here, so we're going to delete this and see where the Dixie takes us. So you got this ABC down here into a bigger retrace zone. So the Dixie giving risk on assets a little bit of a bounce here. You got NQ taking that surge up over the last few days. We caught that nicely. And the gold also made a few rises up here off of that 786 or the 706 level. Either way, let's see where the day takes us on Saturday. I think a better play will be inbound towards the close of the week. Maybe they will just induce and chop up the weekend traders. So as of this moment in time, they're heading towards this guy at the 41,975 mark. They're going to liquidate that guy and then maybe drift back down to here. So very sparse pools up above, more linking to this narrative to come lower. So we might just see this slow drift down to this region. So we'll see how it reacts off of those pools down below, and we'll keep you posted. Easy peasy lemon squeezy. What's up, Dingo? MMA Mark, what's up? I tossed CQOQ Inu into the Discord. Nice. I saw that COQ Inu. I don't know where I would look at that, but it actually pops up here. Amazing. This is let's first do our diligence and look at the liquidity here. Volume 702, not even breaking 1 million trading volume 17 million. That could be spoofed, but still less than a million in volume in it. So highly risky, micro cap. Not really into that stuff myself personally, but no offense, of course. I just don't like to be taken for a ride if it's I remember having some good trades with a few of the altcoins in the meta days. So it looks like it came off the cloud here, bounced off the cloud back on Friday of December 15th, yesterday. So yesterday gave this nice little bounce up here. I don't really know what the liquidity or the reason or any of these technicals of this project are, but it does trade nicely off of the cloud. You had this nice little 15-minute entry model when it was thinning on above the cloud here. This would have been a nice little retrace region, probably just below equilibrium pocket. Yeah, it wicked off the 618 and boom, went up to this deviation level. Interesting. Yeah, I mean, it's still on its way. I don't really know what I can't give a thumbs up or thumbs down on it because it's something so new and a shiny object that I don't chase shiny objects, so I'm not really super keen on it. But yeah, you're getting this chill out zone here. If you look at it like this, we could possibly see this cross down event of the hourly meet the suppression, and then you get this kind of sell off idea down into here. If you don't know how to draw these price channels or see them, you can use the regression trend and follow that regression trend to its completion. If we make it beneath this equilibrium zone, then we will head back down lower into here. I'd like to see more of a support bounce idea for fundamental analysis, but this is a meme coin. And then if it gets an order block bounce down in here, then you could be slated to come up to here. And this also coincides with the trend-based fib levels. You know, if you believe it's going to go there from here now, then you have your levels to look out for the 236 here to hold. If it does not hold this 236 level, then you are going lower, down, possibly down to here. And that is my story, and I'm sticking to it for that. Thank you very much. Let's go back to BTC. I'm just getting that, probably liquidated that guy, so we can say fatality on him. Yep. He's gone. 63 million character. Goodbye.
Fatality.
Be careful trading over the weekend, folks, and enjoy the weekend, which is what I'm about to do. So thank you very much for coming on into the live and sharing your essence with me in this eternal moment of which we all share, an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same. Bringing the fire, the accuracy, the precision, all that fun stuff, and we'll catch you